What's good, YouTube? It's your boy Be Easy, and man, listen, yeah, we are back with another video, guys. And whether the price is up or down, we keep a mountain to pitch from on this channel because obviously the price, you look at it, it's a little depressing, but as long as you keep a mountain to pitch from, the price won't affect you as much, even though it does still hurt. So, anyways, moving on. The title of this video will be called We Are Here, meaning you are here on the map, meaning you are here on the map of the squeeze. Where are we in the squeeze? Well, as I say, we're in Act 2 of the squeeze, not quite the denouement. And that's what we're kind of waiting on right now, which is the best part of any film, play, or movie or literature that describes storytelling. The denouement was the point after the climax, guys, where a lot of things get exposed. As we've seen, a lot of these things are getting exposed, but we'll know when the climax hits because we'll be very elated with the the earnings that we get in our returns on our investments, guys. This is an investment. AMC, it's a beautiful company. I love the movies, as I told you guys. I'm a big movie guy, which is why I introduced the denouement, one of the things I learned in visual literature back in the days. So, with that said, let's get right into our first talking point, guys. And yeah, I actually want to start off with the Jeremy Grantham interview. Very great interview. He came here in the 60s and learned a lot about the market. Now a great hedge fund manager. And he describes a lot of the things that's going on in the market, guys. So his obvious explanation is that, supply chain issues along with the shortage of our life valuable things as far as food and things of that nature brings a greater risk that the Fed, he says, has not been aware of or conscious of in the last 50 years. So it's a great interview, guys. Check out Jeremy Grantham. Also check out that the Julian Emmanuel interview that's in my AMC Easy Chronicles, and I'll list the other one in the AMC Easy Chronicles as well, right underneath this video. So here we go, guys. Okay, so we're in Act 2, and I want to start off with the definition of apes. Now, there's two options on this one. We're either apes or we're Caesar apes, which is very intellectual apes that Caesar was able to teach his other ape friends and how to dominate or navigate the English language and basically, teach each one how to fish, therefore you can eat for a lifetime and not a day. So my theory is that if we don't have a squeeze here, guys, then we're really the dumb apes that they described us as, investing in AMC, which I thought was a reputable company, which I see there's making great fundamental traction right now moving forward. And then if we do squeeze, then we are the planet of the apes, guys, and then that's when the fun begins. So this is definitely a PSYOP that's going on right now. And I believe the PSYOP consists of this, as far as to maybe create a new algo is the whole end game of the PSYOP on this end of the, the psychological operation to determine if we did allow retail to invest for themselves, what would happen to the market? And they're not going to get that answer until AMC squeezes. And then we get to see who's smart money and who's really dumb money after this. That'll be the real test. All right, so boom. I did say yesterday I was going to be talking about the S&P 500, but really that Jeremy Grantham interview was talking about that he's short on the indexes, which would be in the Russell 2000. As he said, there's a lot of companies not making money in that index. One of them not being AMC. So he's off on that one stock, but that's 2,000 other stocks, or I'm sorry, 1,999 other stocks that he could be describing. And of course, there's some companies making money, and we described GameStop went to the Russell 1000. Well, I read that just now in my research, and there was 31 companies that went from the Russell 2000 to the Russell 1000, upgrading the market caps. And then there was about 29 other companies, so 50 altogether, that moved to the Russell 1000. So moving forward. Boom. Supply chain who, right? I like the fact that AMC is, to my understanding, is not affected by supply chain as much. I mean, we don't need Micron chips and things of that nature as far as that tech goes. I'm sure there's a bunch of reels laying around that probably unused that we can filter some of these movies through and reuse them. I think I've seen a doc back in the days that they can restring the film off used film. I'm not sure, but anyway, supply chain's not affecting our play as much because even with the pandemic that we're in right now, we're still able to see a rapid rise in the people that are going out to see movies and things of that nature. We want to support our movie theaters because we would not want to be locked in our house with Netflix. Life would literally be boring as hell. So we want to get out and we want to interact with people from a face-to-face standpoint with our mask on, of course, with 6 feet. So anyway, supply chain who? So we got the crash equals the reset. So I believe that this market crash that we're going to experience, as Jeremy Grantham was talking about in his video, is the one that happens every 44 years, the super bubble pop. And in fact, that we're inefficient as human beings, so that would be every 35-year cycle bubble pop right here. So this is going to be a big one, and it's going to be combined with the housing market crash. So guys, check that interview out, man. But I'm just going to give you a few tidbits and pieces from that in my video here, because we want to know where we are far along the squeeze. As I told you guys, my squeeze date I have is an April date because May was the next highest volume related to the January date that we had, where we had a massive amount of volume coming in, 1 billion volume, which is shares traded on that day of January 28th. And then we had our squeeze in June, short squeeze, not even a squeeze. It was just probably a gamma squeeze, whatever type of squeeze it was. It was not shorts covering squeeze because, as I told you guys in my other video, that was Robinhood going out buying shares. And, prior to the buy button, the price was rising. And then we seen people jumping out of Robinhood, transferring shares, which, a lot of us did. I did as well. So I believe that was institutions jockeying for positions and grabbing shares here and there. So that would explain the share price. But that was not shorts covering, as you know. A lot of the big money, the big hedge funds are hedging against their longs and growth with shorting basically the indexes, Russell 2000s, ETFs, things of that nature. So boom, crashes the reset. So when it crashes, the reset is basically going to be the new algo, I think. The IDX platform that has a stop to, cancel out front running. That's where they're going to get that new computer scheme from. As you know, they had to fight that company. They had to fight those short sellers, so they had to get closer. They get higher Ethernet cords. They had to get closer to the seats to get those microseconds advantage over the high frequency trading bots. So boom. We're going to talk about the options, guys. This is going to relate back to the Stephanie Cameron video. A little bit back in the days when she was talking about, basically, she kind of looked at TMI and was like, yeah, options, man, options. And obviously everyone's not doing options, but my belief, if everyone that was involved with the stock market as far as retail is concerned, or AMC is concerned, if every one of us, single one of us did options, we would definitely see a rise in the share price. But not all of us has money to throw away at options like that on a rigged system like that. So we're not going to be trusting anything moving forward. So that's just my theory, quick theory, crash reset. And I'm sorry, this is the options talking point to Stephanie Cameron. So if everybody did options, I'm sure that would give us the more leverage that we need, and we would see a stronger retail. But I'm not going to condone that. I'm not a financial advisor. I don't give financial advice. I'm just an avid consumer of information. And once I get information and I break it down into my brain, into layman's terms, I try to give it to you guys in a palatable way. So boom, PFOF. Payment for order flow, guys. It's a very, very, it's simple, but it's very complex as well. Tiny classified ads, it's complex. But if you saw that movie, you know what I'm talking about. But so the zero commissions. Oh, okay. So how are they able to do that? Zero commissions trading, obviously, guys, it's front running. All right. Day traders are going to give these IOU guys, hey, I got you. When they give the volatility, day traders get in, get out, get it on, get in, get out. They can locate shares that way. If they need more shares, guys, They run it up and bring it back down. If they don't need any movement, they keep it stagnant, low volume, add the shorts, they're running out of liquidity. All that free money is gone. We're going to see where the hedges go because we know where we're going. We're going back to work to continue to do this. People are going to stop investing in hedge funds the more this words gets out. So boom. Fractional shares was also another thing I wrote down here as far as zero commissions has a lot to do with those fractional shares, guys. I'm sure that the bid and ask spread has a lot to do with how they're able to recoup from zero commissions trading. And this was a quick theory I had. I was going to say this a while back on one of my former videos, which is watch out for the monthly subscription services, guys. And we see Amazon just raised their monthly subscription price on the Prime price, even more than 131. I think that we're going to go. They actually went to 160 or 168, something like that. So we see what's going on with that. So with the PFOF, there's also the in-house clearing, the ATS systems, guys. They can basically, this is what they do. When they tell us, hey, I owe you, I got you, they're going within their own brokerage firm, clearing those settlements and putting it down on paper in their books that, hey, moved 100 here, put 100 there, moved 100 here, put 100 there. They didn't move a damn thing. They didn't put nothing nowhere. That's the whole point of it. And the way they are fudging the books, and then I told you guys in that 5 minutes to flush, I keep referring to that because I seem people to understand that. Basically what happens is the DOJ got involved with this, and that was letting me know the Department of Justice was going to be doing research into taking different avenues. And I told you guys this on my video that they're not going to directly come, hey, let me get you. They're going to go here to get there. So the other companies knew, the other hedgies knew they had about 5 minutes to flush a lot of this evidence. And we're probably praying and saying, hey, I hope I don't get aligned with this in these other companies, which we know when the DOJ produces an investigation, they usually have an ample amount of evidence to pursue a criminal case or, a civil case in this matter or whatever matter. So boom, that is how payment for order flow works, guys. It's a bundle. Like I told you guys, Vlad was coming to, a market maker per se, allegedly saying, hey, I got about 100,000 orders. Can you give me those shares? And he's like, yeah, I got you for sure. In which he probably was giving Vlad an elevated price and making his money that way and paying Vlad with Vlad's own money. Who knows? Allegedly. That's probably what goes on. As Ken Griffin has been elevating and quickly, Ken Griffin's just been a little too quiet for my liking, guys. It's a little too quiet. I don't like when he was all out everywhere saying, hey, I'm not a bad guy, all this stuff. Hey, I got to pay my wife all this money, coming out in the news, making Twitter tweets and stuff like that. And all of a sudden, he just went radio silent. He went, I forgot what you call it, but he just went silent. Same thing LeBron did and the Navy SEALs did, which was basically, So boom. T+2, wrapping up the, oh no, there's two more talking points on the payment for order flow. So the T+2 is what they use with the day traders always being able to locate shares. People are buying in, institutions are lending. They're going to constantly be able to locate these shares with the T+2 system. So obviously, guys, I was talking about T+0 way before I think it was even a thing. Like, you know what I mean? They were like T+2, T+35, and I'm breaking down. I'm like, damn, there's got to be a way we can get T+0 to affect same day. And I said, if I can go in 5 minutes, buy and sell Bitcoin and produce that money into my bank account within the next, couple minutes or so, like there's got to be a way that we can bring that blockchain technology to the actual U.S. stock market or even the world the world markets. So that's going to be a thing, guys. It's got to be. We're in the year 2022. A lot of these methods and practices are very outdated. So the share lending. This is hilarious to me because we think as a people, we can just go ahead and click a button. No, don't loan my shares out. And they're like, yeah, I got you. I won't loan a thing. Trust me. Your shares are safe. Knowing that we're not going to be selling this until the MOAS. So they can constantly lend shares and do all type of practices and constantly locate shares. So it's all about share locating, FTDs. That's the main problem with AMC and GameStop and so-called meme stocks is that the FTDs, guys, failure to delivers, as they're constantly trying to locate and squeeze little shares here and there and add up what they got so they can give it here and there and then not let the price run. So therefore they know you're not going to sell yet, so they can constantly loan your shares out. If you think hitting a button on your app on your phone is going to stop them from loaning shares, and hitting a button on a certain app that says, hey, I want to buy lit, and these guys are not going to use their practices that they've been using for hundreds of years to maintain their wealth, you're out of your mind, sir. Allegedly, you're out of your mind. So I think that's going to wrap up this video. So again, we're going to watch as far as the Russell 2000. I think we bottomed out at about 1,900 bucks per share there. So that's something to watch, guys. If it does dip below 1,900, then pain is definitely on the way. But it bumped from 19 back up to 2,000 and a change right now. So again, a lot of these major hedge funds are shorting the indexes, shorting the ETFs. There's a lot of other hedge funds shorting the actual stock, which is the 21% short interest. Those are the guys we gotta really watch. So it's been wonderful learning about the market, man. I love what AMC has done for me as an investor, done for us as a people, to allow us to not be dumb money and just basically learn all the ins and outs of the markets, ways that they can manipulate, ways that we can avoid manipulation. And a lot of this stuff is going to have to come from the DOJ. It's going to have to come from the SEC, the SEC. A lot of our things that we need, guys, as far as the FTDs and the enforcement, has to start soon. We have to enforce some of these rule filings that we have. And I told you guys, the fines should be 1.5 times the amount of money you made. So if you shorted something illegally and you made $1 million, the fine should be $1.5 million to discourage people from doing that, because now you got to give the money back and you got to give us an additional $500,000. So that's my take on that, guys. Quick video in my case. And as I told you guys, I filled out my beneficiary. But before, stay tuned for more. Place any questions or comments in the comments down below, and I'll be able to respond to you guys. Like and subscribe, please, guys, if you like what I'm doing here. Don't just watch the video. We need to get this word out. I need to be able to reach more people, and with your help, we can do that. Stay tuned for more.